Seriously, I could make money just with these two lines. If I added in volume, I could do even better. But if I remember the conversation from yesterday, we told you and we warned you about trend trading this. If I'm going to trade this, I'm going to end up selling all the way up an uptrend. I'm probably still going to score on most of my trades, perhaps only 5 ticks, perhaps even break-even scratches. But I'm going to win on the majority of my trades. So if I can improve on this by adding some value, but obviously even that is only a starting point. Adding in some real money offers, adding in some real book liquidity, adding in some real blocks and leans makes this trade so much better. So when I see this trade here, I automatically think, well, there's a sell opportunity on oil right there. Why? Because the crack spread's going up. That's why. But it's not just this part of the trade that makes any sense. If we go backwards, we can see that this spread trade has been developing over the last 20 or 30 minutes, right? It's not just happened. It's not just something that's just happened. Look, this has been developing over 30 minutes. That isn't just about this bottom edge. It's about the whole picture. When we see this trade and we say, what about volume in this environment here? Could we get a read on the volume here? You can see that there is enormous volume during that period. Now, that's not a surprise because it's a US cash open, of course. There's always going to be enormous volume as the ETF guys all pour in and the oil ETFs need to hedge out exposure on the futures markets and so on. So there's always going to be big futures volumes at 2:30, just like every other market. But obviously that would give me at least a starting point for that sell top line trade on oil. It'd give me an idea that that's where we could start doing business. Now, what does that mean? Well, we have to then start factoring in, if I want to sell oil, what else would I need to see following? Well, of course, the Brent oil WTI spreads. A bit of a problem here because the Brent oil WTI spreads were dropping hard and fast at that stage. So that's a bit of a problem. They're not as good as we would have liked them to have been. What else? The dollar. Well, the dollar is also starting to rally again, but you know, it's got a small, tiny bit of value divergence. So that might have helped us. What about the inflation break-evens? Well, that's the best opportunity because the inflation break-evens are already starting to fall. So if inflation break-evens are starting to fall, that gives us a very strong case to buy some bottom edge, purple line, which means sell some top edge oil. So there's a couple of reasons why we shouldn't sell, and there's a lot of reasons why we should sell. And obviously what happens is the sell comes in and the sell drops off beautifully. There's a bit of money on that short trade. For me, it wasn't good enough. Simple, it just wasn't good enough. And you know what? The fact it dropped, so what? I'm not going to take it ever again. I'm not going to do that trade. It wasn't quite good enough for me. Maybe good enough for you, wasn't good enough for me, and it made some money. So congratulations if you took it. But it wasn't good enough for me. When a supply line is driven up like this, I'm not interested in selling oil. But everybody's going to be different. On this single chart here, with volume, it was good enough. And if that's what you're using, you would have taken the trade, you would have made some money, and you would have been in good shape. What we are in good shape on just now, guys, is a sell side bond top edge trade. We've got all the way down to 25s here now, 25s off that sell price of 9s. So that's turned out to be gloriously good, hasn't it? Just building a little bit of a concession into this bit of business now, and we're starting to see a bid watch at 24s on oil, on bonds, a bid watch at 24 on bonds. So let's see what happens. The low liquidity at the moment, must be that break below 21s, right? So maybe we might see Max getting excited below the 21 print. Let's see what happens, guys. So Max is on bid watch on bonds, which hopefully means Max will take the price down to 21s, and we might get a little look at that bottom edge. That would be pretty nice, wouldn't it? Equities have stalled. They're doing not very much now, guys. They're a pretty poor market so far today. Sell-side top edge has worked out really nicely, but really no inspiration to take the market down. We've seen some bids coming back into the quality spreads. We've seen some bids coming back into the Merrill's line. We've seen the specialists catching a few buyers coming back in again. So whilst they started to sell off the highs, they're not doing it anymore. So it's kind of neutral now, Mike. It's gone very flat in terms of stories, yeah? Take a look at the storyline, see for yourself. You don't have to take my word for it. Let's take a look, first of all, at a couple of lines. First of all, the quality spread. You can see the quality spread has been very bearish in orange. Market gaps up, quality spread does not move. Quality spread is still very bearish at higher prices. But obviously there's been a short-term bullish recovery in the quality spread. The specialists were not bearish at all, and you can see the specialists, as usual. If you said that to me, which line would I lean against, I'd lean against the specialists. Well, they bought the close, not selling the close, they bought the close. And obviously the specialists made the big profits to the upside, good stuff. Since then, the specialists have done nothing at the higher prices. There was a bit of divergence into that higher print, and that allowed us to take the first sellable opportunity into the high price here. But you can see back into this downtick, there's a bit of divergence creeping into this, and obviously the specialists quite happy to let the market come back up against that narrative right there. Pretty good trade, right? Pretty good trade, and a very good outcome from the specialists. So that's the specialists, that's the quality spreads. Looking at the hedgers, when we look at the hedgers here, you can see that they were also very bullish into the close, boomed straight up into the open, certainly not bullish. So an opportunity to sell the high price, but simply balancing up inside this range at this stage. Who else was involved? Warren. Well, Warren was the big mover today. So you can see what happened to Warren here. Warren was very bearish into the close and then changed their mind dramatically at the open, probably because of the bad numbers we saw today. They've decided that they better get away from that short play, and they decided to buy an awful lot of their stuff back at lower prices. And they were a part of the reason why we've seen this big drive higher, as the Warrens have all been buying back some of their very aggressively short positions. And the price has obviously been able to recover a little bit since then. The specialists basically is just the price of volatilities, Stuart. So what we do is we do the SPY VIX. So the SPY VIX is the specialists. It's one of the most powerful lines with the hedgers, but this is the earliest read we get on an adjustment in pricing. And this is the adjustment in pricing. So you can see the adjustment in pricing is a beautiful, 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 high probability, incredibly highly correlated line. And you can see that into the closing bell, they were massively bullish along this bottom line price. Very, very bullish along this bottom line price. And you can see, obviously, they were absolutely nailing the high price on the open here. And sure enough, the price is just broken higher. Well, take a look at them buying back in again here. Look, they bought back in again here. The price is rallying back up behind it. So no surprises that equities are on the uptick. At the moment, specialists suggesting we should be going back up to retest the highs of the day so far. We should be retesting the highs of the day so far. And, you know, that's obviously a breaker that we might still be able to see on the S&P just now. So very, very cheap volatilities. But quality spread, not agreeing with it. So we've got a little bit of a conflict here. But remember, this is the best possible lines. The volatility hedgers and the specialists together is the highest quality line you can probably have for your equities, guys. It is a brutally good bit of business for anybody. Bonds, guess where we got to, guys? Yes, we got to the 20s. Woo-woo! We said that Max would try and drag the bond down to the 20s. Max has just dragged the bond down to the 20 print, and no buy signal. No buy signal, guys. Unbelievable. So what a great sell, by the way. 10s to 20s. 10s to 20s. Beautiful. Great piece of business for the guys that were with me on the bonds. I like your style, guys. I like your style. Love it. Great bit of business.